You did tweet that you thought ETH might well, and I'm quoting here, might well go to $20,000 this cycle. Are you still standing by that?
It's all I did, no magic. I took the chart from 1 million wallets and 1 million wallets in Bitcoin. And where did it go? It went to 20,000. So I'm like, okay, there's a good enough guess. Does it hit that? Does it not hit that? Irrelevant. What it means, what I'm really trying to say in something like that is it's much larger than you think. And we've got some idea of an event that played out in the past that looks very like this. And, people like me love a bit of a historical chart pattern, even though I said this whole new space exciting. But when you've got something that's so highly correlated, it's like, okay, this is interesting. That sounds a sensible target. And I know it sounds nonsensical to many, but because nobody can think in exponential terms, we're just incapable as humans to think. I spoke to Mark Yusko earlier. He said, and he had a great, and again, I don't know if his maths is dead right, but just take it as roughly. He said, I can walk 20 paces and go across my office. Linear paces. If I take 20 exponential paces, I go around the world 3 times. That's why we cannot think in exponential terms. It's hilarious. Humans just can't do it because we don't think that way.
I like that. That's a great quote. And so, Lynn,
whether Mark's maths is right or not, I don't know. But, he's going to be.
Maybe I'll try to find somebody to fact check that.
Yeah, exactly. I'm sure we can find something.
That's like Jeff Booth's thing where he always points out that if you fold a paper 50 times, if you ask people how big do you think it is, and people say, I don't know, like 3 feet, and you're like, no, it's to the sun. Like it's, and after like fold 37, like you're already to the moon. Like the math gets silly once you get out far enough. Yeah.
Wow. Okay. So Lynn, what would be your price prediction for ETH by end of year?
I don't have a strong opinion on that, but I think that because the concern is if you were watching in 2017, you gave a price prediction on any of them in early 2017, they probably would have all undershot what happened in 2017. And so, but I think Raoul's approach, or just kind of looking at historical price and seeing what happens, I think makes sense. And it's part of the reason why I got so bullish on Bitcoin about a year ago, is because I said, look, every time there's a halving, this happens. And so I'd rather take the bet as a certain allocation, because even though I don't have a specific price target, it's almost like you're embarrassed to say what you think the actual price target is. You're like, if it's sitting in there at like 7,000, you want to be like, I think it might go to 100,000, but like, I was like, so even then when I kind of made my Bitcoin argument, I didn't give a price target other than I thought it's well north of here. And I kind of gave like a really big range of outcomes that like starts at like 30,000 and it goes up from there. And so I kind of view Ethereum the same way, where if this is a good year for Bitcoin, I would expect Ethereum to also have a very good year, and in all likelihood probably outperform during the bull market of that phase. I wouldn't be surprised. And so I don't really know where the end of the year looks like. I just think it's probably north of here by probably a notable amount if I were to guess.
Okay.
Yeah, and again, I'd use exactly the same way. Look, again, none of us know. Exponential assets are really hard. Not any of us, not a single person on earth would have guessed how big Amazon got or its share price. None of us would.
Right.
So we're going to undershoot some years and we're going to wildly overshoot other years trying to figure this stuff out. And again, who knows?
All right. Let's talk GameStop. I just want to hear kind of what your main thoughts are around everything that happened. And either of you can go first.
I'm actually more on the fence about it than many. It got all the tribes up with their hackles out. I love the democratization of financial information trading. I love the fact that people are now not going, we started Real Vision for this exact purpose, the democratization of information. You don't give it to a wealth advisor who you barely meet once a year. He takes all your life savings, and at the end of it, you get an outcome. It's madness. So people are now taking an active involvement. It took a while for the millennials to do that because they had a lot of debt, but now they're in it. Whether it's stimulus checks or not, doesn't matter. It's great. It's great to see. And people like it's, David against Goliath. Well, they're actually just doing what everybody else in financial markets does. I mean, hedge funds will look for every single short position. If they think somebody's really crowded short, a bunch of them will get together and try and squeeze the other one out. That's financial markets. That's how it works. That's how you try and extract value. I think a lot of that was normal. I think Robin Hood went about everything in a unfortunately ugly manner. firstly, most people didn't realize, and any of us who've been in markets for a while knew that if the product's free, you're the product. And that will be the same with the new Strike network as well. Don't forget there's a bunch of FX transactions in the middle of that. Somebody gets paid. So in this, you've got that whole Robinhood, the millennials not realizing it, because many of them still don't really realize with Facebook that they were or Instagram that they were the product. So there's that learning, and Robinhood also didn't have enough capital. That was actually the issue for the amount of margin trades that went through. So when volatility went so extreme because of so much retail option activity, everybody got tapped on the shoulder. But people like Interactive Brokers had plenty of capital. They had 10 billion of capital, but Robinhood didn't. And that is where lies the problem, because they created their own settlement system internally to net off trades. And that's what created the problems. So outside of the philosophical battle of David and Goliath and the democratization and people against the hedge funds and are the hedge funds crooks, all of this stuff, it's actually a story of broken financial plumbing.
So what you're saying is that if Robinhood had outsourced that function, then most likely that third party would have been able to put up enough margin collateral
My guess, and I don't know, is the reason they have their own netting off internal clearing is it lowers margin. So, which is why prime brokers use hedge funds use prime brokers for a similar reason, because you net off. So they netted off, so they didn't have to post as much margin, so they have more free capital in the business. So what happens in times of stress, they didn't realize that this is what happens. But the actual issue is here, within the story is the story that a short position potentially was larger than the entire market cap. Whether that was actually the case or not, I'm not sure. But it's the story of plumbing. What actually went wrong is the plumbing blew up.
Well, so Lynn, I do want to hear your thoughts, but I actually just want to ask Raoul, because I was trying to figure out, when I was looking at all that, obviously I also spend my time looking at DeFi, where a lot of things are over collateralized. And then when people don't, they can get liquidated when the value of their collateral falls below, what or the ratio of what they've borrowed. So, I was just trying to figure out, well, would any kind of smart contract like that solve this issue, or not solve, but prevent it, where, instead of just a blanket, nobody can buy anymore, then like individuals maybe that don't have enough collateral will, not be able to do something. But
firstly, to have stopped the leverage on the hedge fund side, which was extreme, and on the option trading side by individuals. Again, a lot of this could have gone on blockchain technology. So at the core of the custody system, which is the DTCC, is where some of this problem had evolved, and who owns what in a situation where there are more short sellers than there is market cap. If that was the case, none of that should have happened. It's because there's no recorded ownership at a trusted level. We saw that with Dole Foods. We've seen this on numerous occasions with Lehman Brothers and the 32 times rehypothecation of certain assets. So all of this is the big mess that when I first saw Bitcoin, I realized that actually the blockchain is an answer to so much of this.